One fund on point for today, the expert to talk about it. This is the ETF of the week. Welcome to the ETF of the week, where we get the latest take from Todd Rosenbluth, the head of research at VettaFi. And at VettaFi.com, you'll find all the tools you need to be a savvier, smarter ETF investor and to get more details on the new, newsworthy, trending, and timely ETFs that we discuss here. Todd Rosenbluth, it's great to chat with you again.
It's great to be back, Chuck.
Your ETF of the week is
the Invesco S&P 500 Momentum ETF, SPMO.
SPMO, the Invesco S&P 500 Momentum ETF. Well, the market has had momentum. It's trying to break through to new record highs. Is this basically ride the wave and that's it? Or is there more to it right now?
So this is less of a projection that people should ride the wave and more that they have been. SPMO has been very popular this year. It's seen $4 billion of net inflows. That's accelerating in most recent 4 weeks. It's really exciting to us when we see an ETF that's been around for a while, but now is starting to get the momentum, pun unintended. And so this is using the S&P 500 stocks. It's the 100 stocks with the best relative strength. And I know we can talk about the relative strength with the audience quite often. But what's inside this surprised me. We can maybe talk about that. It's performing quite well. The trend has been the friend with this ETF. I wanted to take a closer look.
Let's take that closer look. Let's dig in on the portfolio, because anytime you're dealing with S&P and then put a word, an adjective, momentum, quality, whatever it might be, you are looking at how somebody is straining and sifting through the index. So how are they doing this? Is this done with an overlay strategy of some sort? Is this done by getting rid of the slow pokes? What's going on?
So this is the 100 stocks every 6 months that have the best momentum characteristics, relative strength, and I can't get into the weeds on specifically how they're doing it from memory, but every 6 months the portfolio rebalances with 100 companies. It sometimes is more than 100 stocks if they pick a company that has more than one share class behind it. I had expected this to be mostly technology stocks, and I'm pleasantly surprised to see financial stocks. JP Morgan is one of the top 10 holdings, to see consumer staple stocks. Walmart and Costco are among the larger holdings, the top 10 holdings as well. So you do get exposure to technology stocks, NVIDIA and Broadcom, but this is not just a growth strategy. And people tend to think of momentum investing as growth investing, and that isn't necessarily the same. What you're going to find inside this portfolio is going to be different, and it's not a static portfolio.
But it is S&P 500 stocks, and people will have plenty of S&P 500 in their portfolio, even if they don't have an index fund, if they just have a plain vanilla growth fund. So how are we doing this? Like, if you have never been a factor investor, and momentum is a factor, the same way quality could be, low volatility could be, et cetera. If you've never been a factor investor, or if your factors have only been really growth and value, does this play well and mix well, or is this just a lot of overlap?
So I think this is a way to overweight exposure to a factor. So many people own S&P 500 based ETFs and mutual funds from iShares, Vanguard, State Street, what have you. This you can complement onto that. So this is a risk on strategy. I'm surprised you didn't bring it up. We talked last week on perhaps the lowest risk strategy that I could possibly have come up with tied to treasury bills. So that was a risk off strategy. This is a risk on strategy. You can add this. This is probably not a good core position. This is a complement to your S&P 500 exposure to overweight those stocks that are more risk on in nature. And they aren't necessarily the largest stocks. So yes, it's the S&P 500. And yes, I cherry picked a couple of examples off the top of my head that are large cap stocks. But Apple and Microsoft, I believe, are not inside this portfolio. So you're not necessarily double dipping on all of those mega cap stocks, just some of them, as well as some other more moderately sized S&P 500 companies.
Because this is kind of an add-on, a way to lean in, Is this, in your mind, less of a core position, add this and hold it forever? Because I want to point something out. Now, you are not a trend follower. You are not the guy who we say, hey, what about the 200-day moving average? But I'll just point out that the last time SPMO was below its 200-day moving average, it went below its 200-day moving average on April 2nd, on Liberation Day, as the tariffs came out. And it came above its 200-day moving average about 3 weeks later, basically as the market had done it. So it missed, if you did the 200-day moving average, virtually the entire V-shaped downturn that we had. And now it's again above its 200-day moving average. So is this maybe, because it's momentum oriented, the quintessential, you don't want to necessarily lay this down forever?
I'm going to trust you on those facts that I didn't know coming into this conversation. But yes, I think this is a more tactical move. If you believe that we are going to continue to see new highs and we're going to see the stocks that have led the market continue to lead the market, then a momentum strategy works out very well. This rebalances every 6 months. So if the trend shifts and all of a sudden a different group of stocks leads the market higher or bounces back and leads the market higher, you will not necessarily capture that with this ETF. That's why I think it's good that this is added on to a broadly diversified portfolio. So you're still getting that exposure to all of those large cap stocks, but that you're overweighting those if you believe the trend is your friend.
So like you said, this is a risk on choice, something you want to consider when you're going, yeah, like the looks of it, risk on, as opposed to last week where it's don't like the looks of it, go risk off.
Exactly. This fits in very well for somebody who's willing to take on additional risk. And we're going to we're going to offer up a number of different ideas in this ETF of the week based on the market environment and based on what is catching our attention, based on the flows and what's going on in the marketplace. I think SPMO is a great ETF to get exposure to momentum investing in a broadly diversified manner.
It's SPMO, the Invesco S&P 500 Momentum ETF, the ETF of the week from Todd Rosenbluth at VettaFi. Todd, interesting choice. See you again next week.
I'll see you next week.
The ETF of the week is a joint production of VettaFi and Moneylife with Chuck Jaffe. And I'm Chuck Jaffe, and I'd love it if you check out my hour-long weekday podcast by going to MoneyLifeShow.com or by searching for it wherever you find your favorite podcasts. Now, if you're searching for your next favorite ETF, there's no better place to go looking than VettaFi.com, where they've got all the tools you need to make yourself a better investor. They're on X or Twitter at Vetta_Fi. Todd Rosenbluth, their head of research, my guest, he's there too at Todd Rosenbluth. We will be back next Thursday, June 26th, with another ETF of the week. And until then, happy investing, everybody.